All right, guys, Mark Deaton here. I want to make a quick video. Take a look at the Dow Jones Industrial Average and the S&P 500 as both these indexes approach some important Fibonacci retracement levels. We can see the move down was massive. From basically kind of we're teetering down right here, but a full-on crash right in here. And price is way up. We have retraced this move by about 50%. Just visually speaking, if I look at this high and I look at this low, we've come back up at least 50% between these 2 points. And that's what a retracement is. It's a, if we come up to this level right here, let's say we make it over to here, that's a 100% retracement from here down and back up. So right now we're at about 50 or 60%. And what we're going to do is grab our Fibonacci retracement tool. I like to grab the most recent high that we've come off of. And I'm going to kind of click and drag from there. I'm going to go all the way down to the low down here that we reached. And I'll drop that right there. And you can see that puts price at slightly above the 61.8% retracement level. What does that mean? That means if price is going to move down, this is an extremely high odds area where price will continue down. So we just need to build a trade that gets us in right here. And there's a lot of ways you can do that using swing structure, support and resistance on an intraday time frame, and maybe a 3-candle break. But I wanted to show you, if you missed out on this move down here and you wanted to short the markets, now's the time to begin looking at this zone and planning your move. Let's take a look at the S&P 500, which is very similar. Okay, if we look at the S&P 500, the SPX, this is the actual index. We can see very similar price action, just a major crash. Our low is right about here. We broke out of this bottom right here. Pretty easy move to grab if you were paying attention, for sure. But let's look at where price might reverse now. We can see from this high to this high, we're approaching a 50% retracement. So what we'll do is we'll go to our studies, our drawings, grab our Fibonacci retracements. I'm just going to grab these two little highs right here, okay? Right about there. I'm going to come down to my low right about here, and that puts me right at about a 50% retracement level. So if I wanted to short this market, again, just recognize that if price is going to continue to move down, it's going to come down like this. It's going to retrace to 50% or usually 61.8% max, here or here. On the Dow Jones Industrial Average, we're at 61.8. On the S&P 500, we are at 50%. So if you wanted to short this market, it doesn't mean you just jump in and short it right now. It means that you're going to watch closely for a low-risk setup, and that may not happen. Okay, and if it doesn't happen, then there's not much you can do. You can also watch a basket of stocks that have closely matched the indexes, and I don't have any off the top of my head, but you can go look at AutoZone and GoPro and Facebook and Google and Bed Bath and Beyond and and a bunch of other stocks and see if you can find stuff that is closely matching what's taking place here, because they may offer, those different stocks may offer a low risk entry where the indexes may not. Okay, and what is a low risk entry? A low risk entry is where, let me just try to draw you a picture. You're probably going to have to go to an intraday time frame. Let's just say we have a black candlestick start forming here tomorrow, but it's up high, but it's black. Okay, and then let's say tomorrow a candlestick opens here, begins to head down, and it's black also. So this would be a low risk entry. This candlestick here completes the swing, and as it takes out the low of this candlestick, okay, the low of that green one I drew, as it takes out that low right here at this line, we would find entry, right in here, maybe even in here, as price pushes through this low. That would be one low risk entry. Okay, support, resistance, swing structure. To really isolate this, we may have to jump to a 15-minute chart to see it, but that's how you'd find entry. So that's my assessment of what's taking place right now on the markets. Today is Thursday, so tomorrow and Monday, if we're going to continue, if we're going to reverse and continue the crash downward, now's the time to begin to plot and plan. And again, you got to have this take place. Something like that has to take place or the risk is too high. We can't just go, okay, this has moved up, now I'm going to get in. Many dollars have been lost with idiot strategies such as that. So follow price action, folks. Price may continue to go up. Okay, a Fibonacci pattern does not control price. Price does whatever the heck it wants to do. These are just statistically speaking, price is going to reverse right now, and even higher odds on the Dow Jones Industrial Average is going to reverse because it's up at 61.8. Hope you enjoyed that video. Hope that helps you guys if you're planning on shorting this market, and if you're long on this bounce. And keep a close eye on what happens here in the next couple of days. All right, guys, take care. Bye.